Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos. A special thanks to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, well, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, buying dividend growth stocks in growing companies with positive cash flow that covers the dividend, companies with a high return on their invested capital, and with nice margins. I utilize both a dollar cost average approach, consistently investing in the stocks within the portfolio on a minimum of a bi-weekly basis whenever I get paid. Typically, it's every week, about $1,300 on average a week in new stocks. I also do large purchases if I have extra funds. I cover all my investments into the portfolio, so it's free to see what I'm doing. We all have enough to pay for, so I don't have a paid Patreon account or anything like that. There's no other sites you've got to go link to and pay to get in to see anything. It's all out in the open, what I buy, what I sell, dividends that are paid, everything I show on my Sunday update videos. Today, we are going to do a subscriber suggestions. You know, what's in the suggestion box this time? Looks like the J.M. Smucker company. So we are going to do a little bit of a deeper dive than we typically do. I do a series throughout the week, which is more of a high level dive called the Stock Pick of the Day series. If you're interested in this kind of content, if you're interested in dividend growth stocks, dividend growth portfolio reveals, dividends paid out, I do another one is my monthly stocks for the month that I focus on adding to the portfolio as long as the price stays relatively low or where I've done the research on it at. So if you're interested in any of that, go ahead and hit that subscribe button down below. Hit that notification bell so you're notified whenever new content comes out. And if you like this video at any time, go ahead and hit that thumbs up, hit the like button as well, and help me out, help this small channel, YouTube channel, grow here so we can get the word out, and you too can be reach financial security, all right, utilizing the utilizing a dividend growth stock approach where the passive income is paid out by the dividend eventually pays your bills. That's the idea behind this investing style. With that said, let's take a look at the J.M. Smucker company. And I'd like to give a credit to Luis A. Hernandez Munoz. If I butchered your name, I really do apologize. He commented back on a Franklin Templeton. This is one of the stock pick of the day videos here. Franklin Templeton we reviewed. Can you do a video of J.M. Smuckers? Well, of course I can. Let's take a look at J.M. Smuckers. And thank you for the suggestion, Luis. All right, J.M. Smucker Company, and we put a lot of this information together a few days ago, so this may be dated. We'll see the date here in a little bit. I don't see it here on here, but we'll see it. I think it was about November 1st, November 2nd, right in there. But it closed out the day at that time at 149.31, so it may be a little bit different now. So look that up and see where it's at, but it should be around $149.31, right? 52-week range as low as $119.82, as high as $152.16. So currently, unless it's dropped down significantly, it's pretty close to that 52-week range. So I always like to look at stocks as they get close to or are at their 52-week low, right? Hopefully they don't drop through it, or if they do, then let them drop through and then wait till they level back out, and then I look at them. But you know, if a company's setting a new 52-week low, it may be due for a big decrease. So that's what they call catching a falling knife, right? You want them to really hit this low and kind of level out, maybe even coming back up. So, you know, it comes back up to 120, 130, and then, or 125. I wouldn't go much over 130, depending on how the numbers look for me personally. But let's see how they shake out whenever we look at this. Average volume on this day was 779,000. It looked like it was at 734. So probably part of the sell-off here, right? They were down 0.9% on that day. 15.91 billion market cap, beta of 0.22. So this is actually extremely low volatility. That is really nice to see. You want low volatility in your stocks, right? You don't want it to be up 161 days and down 100 the next, right? You kind of want a level, nice, stay the course, preferably a nice steady up, maybe some down days back up, but overall up, a steady eddy stock. So that's nice to see. Low beta of 0.22. That's one of the lowers I've seen. PE ratio 27.45. This is on the high side. So again, unless this has come down significantly for a Smucker company, right? They're selling jams and jellies, stuff like that. You want a much lower PE than this, in my opinion. I mean, I would look at something, you know, 16, 17, 15, 14, somewhere in there, that PE ratio for a company like this. Like I said, jams and jellies and that sort of thing is what they primarily are in. They do have some, I think they have some, their hand in some animal products as well, like dog snacks, milk bone, that sort of thing. Their earnings date is, or sorry, earnings per share 5.44. That's nice. Nice earnings per share. November 21st is their payout date. So it's coming out, our earnings date. So if you want to know how their earnings are due, you'd want to check that out on November 21st. Dividend on the year is $4.08. They have a yield of 2.71. That's a decent yield. It's higher than the overall market. I like stocks above 3%, so that would be another reason to maybe watch this one to see if it comes down, as it's pretty close to 3%. If you could get it back down here at the 119, you'd probably be right up against 3%, if not a little bit over. Ex-dividend date of November 9th. So this one is coming up next week. You would need to buy this the day before the ex-dividend date to get the dividend. A one-year target estimate, at least according to Yahoo Finance, where this information was pulled, not affiliated, just where I like to look at information. They have a target estimate of $140.69. So again, unless it's dropped down at 149.31, they're saying it's overvalued. They're saying over the next year you could see lows of 140. So again, might be another reason to watch this one, see if it hits this 52-week low again. Now let's take a look at more of the metrics, right? We're in Yahoo Finance, and if you went over to their financials, I like to look at total revenue, and we want to see growing revenue from year to year, or at least over a 5-year period, like 7.8, 7.8. So that's down a little bit, but that's not big. So that's pretty much flat. 8, 7.9. So overall, from 7.78 to currently 8 billion there, that's growing revenue. That's what you want to see, right? Cost of revenue maybe going up a little bit, pretty much steady, same thing. And same thing, you want to see a pretty steady growth in profit, 2.9, 3, 3.1, 2.7. That was down a little bit there. And it looks like it might be around the 2.9. So if you said it was flat, profit's pretty much flat, that's not a bad thing. Probably why there's that 0.22, right? Nice steady Eddie stock, pretty much. Basic average shares, 113.7, 114, 112, 108. So they're going down. That's what you want to see. You don't want to see stock dilution. You want to see stocks going down, right? They're decreasing shares, so they must be buying back some shares, which is nice. All right, we're still in financials. Now we're looking at the balance sheet. The last one we were looking at was the income statement. Now we're looking at the balance sheet, right? So on the balance sheet, I'd like to look at total assets, right? You'd like to see them go. They may have sold something off here, 16.7, 16.9, 16.2, 16.0. So they may be selling off some assets there, maybe to raise cash. Liabilities, you want to see this decreasing over time, right? Liabilities means debt, basically. 6.375, but realistically you just want to see that their total assets is over their total liabilities. So 16 is definitely greater than, more than double than what their liabilities are. So that's great. That's nice. That's nothing wrong with that. Same thing, ordinary total shares. You can find ordinary total shares on multiple spots, the income statement plus the balance sheet, I believe, maybe on the cash flow as well. But that tells you how important it is, right? You're going to see it in multiple spots. If this number is going up over time, that is what they call stock dilution, and you want to watch that. You don't want to be diluted as a shareholder unless you are getting significant value. One, a very high dividend yield, or two, the price is of the stock is continuing to go up over time. Some companies dilute you, right, over time because they're giving shares to their workers, right? Their higher ups, their executives, the VP, the president, CEO, those type of people might get stock shares as part of their package. So if you do see that and the shares are going up, you want to do some research. If you research that the company is increasing their share count because they're giving their employees shares of the company, then what you want to look at is what they call insider trading. Are the insiders, the people in the company, selling their shares, or are they holding their shares, right? If you have insiders all of a sudden dumping shares, they may know something that's about to come, and it's a good time to watch out what's coming up, right? But that's getting a little deeper than this one needs to get. So let's keep going. Still looking at the JM Smucker company. Still in financials. Now we're into cash flow, right? And what we want to see is positive growing cash flow. 781, 985 million. This is 1.2 billion, 718, and 521. So unless they make a significant amount, it actually looks like free cash flow. It's kind of all over the place, growing here, back down here, maybe down a little bit here. You really want to see free cash flow, right? Repurchase of capital stock. So there you see it. See, they're buying back stock, 5,400 shares, 42 or 4,200,000. So yeah, buying back stock here, paying down debt. So that's all nice to see. The only thing that is a little concerning here is their free cash flow is kind of growing up to, 2021, 2022, or 2020, 2021 it was down, and it looks like it may be down in 2022. So you'd want to look at that. Maybe they sold off some divisions, so they've got a little less cash flow, which means part of that liabilities we might have saw, or assets there that we might have saw. Maybe they sold off some assets, and that's why this cash flow is down. You definitely want to get more into the books and see what's going on here. All right, well, let's keep on going. Now we are going to look at statistics. We're still in Yahoo Finance, just on the statistics tab. So if you wanted to look this up yourself, this is what you do, right? Go to the statistics. We were in financials. Now we click over to statistics. I like to look at, okay, you've got the trailing P at 27. Your forward P is much lower. See that? 18.02. So that is actually nice to see. Much lower forward PE. So that's what it should look like going forward, is a lot lower than what it was previously, and a lot lower than where it currently is. PEG ratio, you want around a 1. Price to book, around a 1. So this isn't too terrible. A little high for both of those, my liking. Profit margin, 7.3. Operating margin, 13.6. Those are decent. Both of those numbers are very decent. Return on assets is 4.21, and return on equity, 7.2. Little low for return on assets, but not terrible. And return on equity, 7.2. Not terrible either. So not bad numbers, not great numbers, but not bad either. For a company like this, 7% profit margin, for selling jams and stuff, pretty good. Return on assets for it, that just means the money that they're reinvesting, that's their return on assets. They're getting a 4.2% return, which, to be honest, is right in line with what you can get now for CDs. That's a little low. Return on equity is not terrible. Now, the other thing I like to look at right here is what you can look at. You can do a quick look at a stock and see if it is overvalued, undervalued, or fairly valued by doing this. It's what they call the dividend stock. What do they call it? Dividend stock metric, or I'm not sure exactly what the term is. But basically, what it means is you're looking at the 5-year average dividend yield, right, is 2.97. Now, if it's higher than this, that means it's undervalued. If it's lower than this, that means it might be. If it's lower than this, then that means it's above value. It's higher than what it should be. So you can see the forward annual dividend, 2.7. Its 5-year average is 2.9. So its 5-year average is higher than its current. So this speaks to a little above value right here, right? I want the dividend yield higher than the 5-year average, and that would tell me this is undervalued. So currently, to me, dividend theory, based on the dividend theory, the average dividend theory, average dividend yield theory, something along those lines. 5-year average dividend is, no, I'm sorry, right here. 5-year average dividend is 2.9. Yeah, it's 2.7. It's lower. So it's overvalued. Currently, it's overvalued. They have a payout ratio of 72.79%. I like under 75, so they're pushing against that 75 right now. And to me, based on dividend yield theory here, they would be a little overvalued. But let's keep looking. JM Smucker Company. So we're over to a stock analysis. That's where we're pulling this information from. Another site I'm not affiliated with, but like to look at, right? We see that same, they're calling it 2.69, and again, November 1st. So, right, I started pulling this data around November 1st, 2.69, 2.7, 72% payout. We just saw that. They do have a 6.35% dividend growth, so their dividend growth is growing nicely. Annual dividend, $4.02. We've already seen that. Quarterly payer, ex-dividend date November 9th. Already looked at that. And their cash dividend, at least the last one, or the one they're going to pay out on November 9th, is $1.02. So if you own it, you're going to get $1.02 per share, and you've got a 6.35% dividend growth. So not terrible. And at 72%, 70, I mean, you are getting up there in payout ratio, but you're not terrible. Like I said, I like anything under 75, so you're below that here. And according to stockanalysis.com, again, where I like to pull information, not affiliated, they've had 23 stock analysts take a look at this. They call it a consensus hold. I would have to agree with them. If it's in your portfolio already, I'd just collect the dividend and reinvest it. either back into Smuckers or into another stock in your portfolio, or pay your bills with it. Whatever you want to do with your dividends, they're yours. But here, I would be much more interested if it went back to the 52-week low, 119 or 118, I think it was there on the previous slide. And they have an estimate low here of 125.24, which would be a 16% decrease in price. 143.51 would be a 3.88% decrease in price. And if it happened to hit the high, then you'd see a 12.52 return, $168 per share, right? So to me, JM Smucker Company, ticker SJM, and they are out of the consumer staple sector. If you're interested to know what sector they're in, SJM is the ticker. They're overvalued, in my opinion, at least right now. It's a hold for me. If it's in your portfolio or if it's one you're watching, I would definitely wait for it to pull back down, in the 120s or lower. Maybe do a reassessment on that. I didn't like that the free cash flow doesn't seem to be growing consistently. I don't like that the dividend is currently lower than the 5-year average. That speaks to overvaluation, in my opinion. And obviously, not that these stock analysts are the end all be all, but even they say, hey, consensus hold getting close to a sell, maybe one to maybe a little bit overvalued, and you could probably get it cheaper over the next year, especially if we stay in a recessionary state. Things pull back, people start losing their jobs, that sort of thing. So that is it for this one. Thank you for the suggestion, Louise. Really appreciate it. SGM Smuckers, like I said, for me anyway, it's a hold. If it was in my portfolio, I wouldn't be adding to it. If it's not in my portfolio, I wouldn't be looking to buy it, at least at $149. You have to come back down, like I said, to its 52-week 119, 120-ish range, and then I'd reassess and see what I thought then. If there was other better values out there, I might lean that way. But that is Smuckers. And with that said, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, and drop a comment down below. Let me know what you think. Is Smuckers in your portfolio? Is it one you're watching? Is it one you're holding on? Is it one that you're going to throw on your watch list for the future? I'd love to hear it down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Constructive criticism as well. If there's things you don't like about the videos, go ahead and drop them down below. I'll read them and give them some thought. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in your education or entertainment purposes. Investing involves risk. You can't lose money and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.